Hello Wolfpack, welcome back to another Bitcoin video. Quite a lot to talk about in regards to FOMC and also the recent price action on Bitcoin. Now, FOMC is 36 hours away, right? Roughly 36 hours, a little bit over 36 hours actually. It's that pink line I've got on the screen here, and this is the hourly chart. Okay, so a little bit over 36 hours away, and so we're getting close to it. And we need to discuss in this video what's going to happen regarding FOMC, but also and quite importantly as well, why have we seen this drop in recent hours here, recent 2 days, I suppose. So we went from $20,000 all the way down to around 18,200 in the matter of less than 12 hours. And why did that happen? Well, to the best of my knowledge, right? Because we've obviously pumped back up now, which is interesting because you don't usually do that after you drop like that. But to the best of my knowledge, the reason that happened is because of Joe Biden. And Joe Biden said something on, I can't remember what it was. I think it was like some sort of like program. And he said that if China invaded Taiwan, he made a claim that the US would get involved. And obviously that led to the markets going down. Now, that's an unsubstantiated claim. It's not actually a true claim. He just kind of, I'm not even joking. He just kind of made it up. People had to come out and say it wasn't true. But yeah, so that led to a drop. I think that's what it was at least. And that's probably explains why it was so quick to drop. And then when they came out and clarified the situation, it pumped back up, right? So he literally dumped the market. Thanks, Joe Biden. You lost people millions of dollars. Good job. Anyway, regardless of that, that's a bit political, but it is kind of funny in my opinion. It's funny and it's also stuffed up because you can't make mistakes like that in politics. But hey, look, that's what happened. We've come back up now, and it kind of just, TA didn't really work for a bit there. I suppose it did, though. I mean, if we zoomed in on the, for example, let's go to like the 30-minute chart. We can see we had a nice little head and shoulders, inverted head and shoulders formation at the bottom here, right, the left shoulder over here, the head, and then the right shoulder. So it was a predictable pump, but like, it shouldn't have happened in the first place. But so you can almost just remove that from the screen, and you can do that because, well, the dump happened. Right, it happened and it's gone now, and now we're back within the same structure we were before. So I'm just going to act like it didn't happen because I don't think it was actually natural at all. But yes, so we are within a descending broadening wedge structure. A descending broadening wedge structure is obviously a bullish structure. It typically breaks to the upside. That little mishap there was due to external events, but this formation realistically should break to the upside. The thing is, we can't be too sure about that at this point in time. If it was a week ago, we could, but we can't be too sure about that at this point in time, simply due to the fact that we have the FOMC decision, right, in 36 hours, which could very easily toss up the TA a little bit. So we need to get into that, and we'll get into it in 1 second here. So that's the short term. I suppose total cryptocurrency market cap is another thing we need to talk about before we get into FOMC. This is broken down, okay? Broken down from its structure. You can see this yellow kind of triangular structure. In fact, I'll make it pink so you guys can see the actual triangle itself. Let me make the bottom line pink, and I'll make the top line pink. So yes, we have that structure there. We broke it to the downside. We've come back up, and we're actually performing a bearish resistance support flip on that structure, which is not good news, right? That's what's happening with cryptocurrency market cap. And that may be indicative of what's to come, because sometimes you see these bigger charts, like cryptocurrency market cap chart, foreshadow what's going to happen with Bitcoin. So maybe this is a bearish breakdown in place, and it would make a lot of sense. I mean, I'm not going to go over it again. You guys know my prediction. And also the S&P 500 is the same thing, right? It's broken down from its massive structure, broken down from the support lines, come back up, it's rejecting off of the bottom of it. So both the S&P 500 and the total cryptocurrency market cap are seeing resistance support flips. Okay, so that's not typically a good sign, to say the least. And then on top of that, like, we have the prediction already. You guys already know my prediction at this point. But for those of you who don't, my prediction is basically this. I think Bitcoin will go down as per the 4-year cycle theory, which you can find about more in other videos I've done. As per the 4-year cycle theory, I think Bitcoin will go down and bottom out sometime between October and November. Okay, not October and November. October's in 10 days, right? So we're getting very, very close. And I think the bottom could be as high as a double bottom at 17.5k. I think we genuinely could double bottom at 17.5k. However, I do have alternate scenarios in mind, and my other alternate scenario, my worst case scenario, would be a bottom in this orange rectangle, I should say, at 11k to 13k, and I have my buying plan here, right? So this is scenario 1. 33% at 17.5k, 33% at 11 to 13, and 33% at a breakout of the yellow line. If we don't reach the lower targets, it's just going to be 33% at 17.5 to 18, and then 77% at the breakout. 67%, I should say. I think I said all those numbers wrong. 33% at 18k and 67% at the breakout for the second scenario. But essentially, yeah. Regardless of that, the main reason I'm bringing this up, I don't just want to go over the buying plan again. I've done it before, but the main reason I'm bringing it up is because we are getting awfully close, right? And the reason we're getting close is because, well, look at this. If we were to bottom at 17.5k, right, the latest date we could possibly bottom, as per this macro downtrending yellow line, would be mid-October, the 18th of October, maybe the 17th, right? Say that again. The latest date we could possibly bottom if we were to hold the support level at 17.6k would be mid-October, which means we could be bottomed out in Bitcoin within a month, easily. In fact, it wouldn't be a surprise at all. And then the latest we can possibly bottom ever, as per my prediction, the lowest I think we'll ever go on Bitcoin is 11k. The latest, if that happens, the latest we can bottom is 26th of November. So there's basically, I'd say that like an 80% chance, 90% chance Bitcoin bottoms out before December, right? Before we see the first day of December, Bitcoin will be bottomed out. That's my personal opinion. So we're getting awfully close, right? It's actually really not that long away. And considering the first scenario, which is the double bottom at 17.5k, which is relatively likely, okay? Not certain, relatively likely though, I think. We could be bottomed out within a couple of weeks, okay? So keep that in mind here. We're getting very close. It's not the time to be getting overly bearish, right? With that said, we could very easily drop down below to this lower rectangular region. Very easily. It's definitely possible. But even with that said, right? Even with that said, the latest we can bottom out is like the late November, which again, isn't actually that far away. Late November is only 2 months away. So, I know a lot of people disagree with me on that. Lots of people actually disagree with me on that. I suppose that's the perfect segue into the macro. It's like so many people disagree. So many people think that, we're too bearish. We're going to go lower than that. It's going to take longer than that. People are thinking, I know probably a lot of my audience would think we're going to bottom out next year, maybe Q1, Q2 next year. I understand where you get that from. I'm obligated as per the 4-year cycle not to believe that because it's the longest date range trend we have on Bitcoin's price history. And, on top of that, I actually just don't believe that in general because I understand the fact, and I'm going to show you now, this is the evidence for it. Okay, and we'll get into this in a second. I'm going to look at this, okay? So right now, I'll get back to that question. This is the probability of a 75 basis point hike on the left, right, versus a 100 basis point hike on the right. So you can see that we've got an 82% chance of a 75 basis point hike, meaning if we see a 75 basis point hike, it's not going to have much of an effect on the price action, most likely because that's expected. It's if we see something that's unexpected, that's when you really start to see the price action getting tossed up. So if we see 100 basis points, we'd see a dump. If we see 50 basis points, we'll see a pump. If we see 75, it will likely go sideways. We might see a slight impact, obviously. We'll see lots of volatility, but it won't actually change anything drastically because that's expected. That's how this happens, right? It's not about the number itself. It's about the way the number is trending, and it's about what the market expects versus the reality of the situation, right? If the market expects 75 basis points, we've priced in 75 basis points. That's how the market works. Whatever it expects, it naturally prices in, right? Now, if something comes out and it's different to what we expect, that's when the major swings start to happen. But what I would say is this, and this is back to the original question. People think we're not going to bottom out this year. I disagree. This is why, right? One of the reasons why. There are many reasons, actually, but essentially this, right? Now, the column on the left here is 50 basis points, 75 basis points, and 100 basis points to the right. Now, this is the November 2nd FOMC decision. So the one we've got in 2 days is 21st of September. This is November 2nd. So you can see that as we go deeper and deeper into the year, the probability for 50 basis point hikes keeps creeping up. We've got a 25 basis point hike now in December. See, the thing is, we've reached basically this rate hike is very likely, as per the data. This is not, I'm not making it up. This is what the website actually says itself, right? As per the data, this basis point hike we're seeing here is probably going to be the last 75 basis point hike we'll see. All right? Unless something unexpected happens, which means that the magnitude of rate hike per rate hike is starting to decrease. We've also seen inflation start to take a bit of a subtle dive, okay? That's topping out a little bit. And people disagree with me on that. They're like, well, how can you tell that? How can you say? I'll show you how. Here's how, right? It's the reality. It's just what's happening, right? We saw 9.1% inflation in, I think it was June, 8.5 in July, 8.3 in August, right? So to act like it's not topping out or rounding out, I mean, we're at the same level of inflation we were at, in what, March, right? 6 months ago, okay? So inflation clearly is reaching at least a local top. And with the interest rates pumping like this, and with the Federal Reserve starting to actually wind down the magnitude of the rate hikes per rate hike, they wouldn't do that, or thinking about it as per the data, as per the expectations, they wouldn't do that if they didn't think inflation was becoming to start getting a little bit under control. The thing that annoys me about crypto, the thing that annoys me about people in the crypto space is this, right? People don't seem to understand, and it's very, very important that you understand. I'm not criticizing you if you think this, but you need to understand. It's absolutely fundamental. The market doesn't care about what the actual number is. They don't care that inflation is 8.1%. Because it's all priced in, right? The market naturally prices these things in. It just happens naturally. That's how it works. Everything becomes priced in. They care when something unexpected happens. So if the market was predicting, for example, tomorrow, say there was a CPI tomorrow, the market was predicting inflation to come in at 9%, but it come in at 7%, that's when you start to see the market react. You don't react when everyone thinks it's going to come in at 8.5% and it's 8.5%. It doesn't react like that. The market predicts the future, right? Yes, inflation is incredibly high. It's 4 times higher than the annual target from the Federal Reserve. However, right, if the market starts to see that this situation is becoming under control, you pump. That's how it works. It doesn't matter what the number is. It matters what the prospects for the future are. And I get very dismissive comments in the comment section, people just saying, oh, future prospects are bad. It's like, well, everyone's always said that at any point in history ever. There's not many times in history where people think the future's very good, especially when you're in a recession. It's not a very good mindset to have, right? Just understand that. The market predicts the future. It doesn't reflect the present. It predicts the future. People invest for the future. They don't care, right? If you have money sitting on the sideline, you got 100K on the sideline right now, and I'm going to bring up another point about that in a second. If you have 100K on the sideline right now, you're not investing thinking, oh, everything's bad, inflation's bad. You're thinking, okay, how can this go in the future? That's what it is. Investment is all about probabilities of future return versus future risk. So if they see that it's improving, right, they'll see that naturally it's undervalued as per what's going on right now, and they'll buy in regardless if the situation is good or not. The situation being good or not it's not the problem, right? It's really not the problem. What I will say as well is this, right? A lot of people are under the impression that no one has any money, so how will the market go up, right? That's the big kind of claim people are making. How will the market go up if no one has any money to invest? This is simply incorrect, okay? It's simply incorrect. Yes, all right, the price of everything has gone up, okay? Jobs may be getting harder to get, whatever, all that situation, right? I actually don't know if that job thing's true. I haven't looked into it enough, but what I can say is that prices are certainly going up, okay? But what I can also say, in Australia at least, right? I'm not talking about the US. I think the US would be the same. Off the top of my head, I think it would be the same. But what I can say in Australia at least, the situation in Australia is this. Yes, all the prices have gone up. Yes, full-time work has been cut a little bit, I think. But household savings per household has doubled since 2020, right? So to act like no one has any money is ridiculous. It's the lower class that's getting wiped out. The middle class, they got all the bloody the donations from the government, right? All the what are they called? I don't know. It's called Centrelink in Australia, welfare, all that stuff, right? That was just loaded onto them. So many programs, so many things. I know the average savings per Australian household is literally, I think, almost double what it was in 2020. So acting like the average retail investor just doesn't have money to spend right now is ridiculous. It's simply not true. And in fact, in a situation where where everything's getting harder to pay for, etc., people are probably more likely to take more risk. And if they have more money sitting in the bank at home, maybe they're going to be more likely to invest in the stock market. I just don't see the evidence, historically speaking as well, for the market not pumping when people don't have money. People didn't have money in 2008. We still pumped. Just because it's a recession doesn't mean the market can't go up. People don't just lose all of their money. That's not really how it works. It's a very small minority of people who lose all their money and get absolutely wrecked, right? And those are usually people who wouldn't have invested in the first place because they don't have the money to invest in the first place. It's the people on the edge that get pushed under the water. When you're on the edge, you're not investing. The investors rarely are the corporations and the middle class and upper class, right? And those people are, it's a little bit more stressful, but they're generally speaking, they're fine. Okay, so, let's not act like no one has any money here. I think that's a bit of a claim people are making that's unsupported there. And that's my opinion personally. I could be drastically wrong. And I probably do need to look at the data a bit more before I talk about things like that. But what I can say is that average savings per household is up drastically from 2020. But yeah, that's essentially it, guys. FOMC in 36 hours, went on a bit of a rant there at the end. I just want people to understand that it's not about what the situation is right now. It's about what it could be in the future. And in my opinion, the future doesn't look bright. It's not about it looking bright. It's about it looking better. It looks better than this. Okay. That's my opinion. So thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next one. Cheers. Go to my YouTube channel homepage and click on the join button. You will see a tab that comes up which shows you all the information of the VIP membership with the Wolves of Crypto YouTube channel. What you get in return for 40 AUD a month, which works out to be around 30 USD a month, is 4 exclusive trading setups per week, which have been extremely profitable in the past. Prioritize reply to comments on my end. a trading psychology lecture, which is extremely useful, and some people have actually said that's the most useful video I've ever made. It goes into a deep dive into the actual mechanics, psychologically speaking, around trading, and then also an exclusive Telegram group access link, which has over 200 members currently, and so you can go in there and discuss the market 24/7 any time of day. We've got members from all around the world in there, so go ahead and sign up to to VIP membership using that join button there. Moving forward, we're going to talk about BitGet, and this is the exchange we use on the VIP membership. So this is all the VIP members use this exchange. Now, I actually was using this exchange before I had a partnership with them. I was the one who reached out to this exchange asking for a partnership because I genuinely think it is such an improvement on the major exchanges like Binance and Coinbase. Why do I think that? Well, first and foremost, it's got 0 fees on spot pairs, which is saving you a bunch of money. On top of that, it's got 5 times lower fees than Binance on futures trading. So immediately it establishes itself as an extremely cheap and efficient exchange to use for everyday trading and even investing, honestly, if you're investing with considerable chunks of money. On top of all of this, it holds true to the values of cryptocurrency. And it does that by being non-KYC on your end optionally, which means that essentially, all these other exchanges here, heavily centralized. They require you to put your identity in. They require you to kind of, trespass and encroach on the values of cryptocurrency. BitGet doesn't ask you to do that. You can do it if you want to for tax reasons, but it doesn't ask you to do it. It's not mandatory. You can use this exchange globally, and you don't even need to link your identity to it if you don't want to. Now, that doesn't take away from the safety of this exchange, because this exchange actually has a protection fund, and we'll click on the link here. And essentially, they have deposited 6,000 Bitcoin and 80 million USDT onto this exchange to make sure that in the occurrence that someone loses their money on the exchange via a hack or whatever like that, you can make a request here and you can get that money refunded to you, provided it was not the fault of the exchange. So that's very interesting as well. Not many exchanges have anything like that. So go ahead and sign up to BitGet using my referral link in the description below, and you will additionally gain access to a reward center with over 4,000 USD in rewards. And on top of that, adding to the list here, you also get 10 USD dropped into your account straight away after you make your first trade using my referral link exclusively. So go ahead and do that. You're supporting the channel in doing that as well. It's completely free and it takes 5 minutes. Thanks, guys. And then lastly, we've got the Crypto Academy. Now, this is for people who want to learn how to trade. So if you're interested in learning how to trade, I recommend this course. This is a course developed by myself and Megawell Crypto. If we scroll down at the bottom, you can see Megawell Crypto, big analyst in the space. We work very closely side by side, share a lot of the same ideas. We also challenge each other on some ideas. And so we've got 2 perspectives together in order to form this one course. You can go to the website and read the bio. Essentially, it's 10 units. It's very comprehensive. It's very extensive. And it's going to teach you everything you need to know about trading in a cryptocurrency market. And to be honest, any financial market. It's going to teach you how to learn those charts. It's going to teach you the right mindset. It's going to teach you how to find the trades, etc. You can join us here. Go to the website, scroll down at the bottom, and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the rest of the information. Thanks for watching, guys. Cheers.